Right, welcome back to the channel. In this video, I'm going to be talking you through another very powerful approach to trading, and I'm going to share with you a strategy that you can take away and use immediately following this video. But I'm also going to break down the approach and how I'm looking at this particular market and how I'm looking to get involved myself. So grab a pen, grab a bit of paper, grab a drink, relax, and let's get stuck into it. All right, so this is the pound dollar, and the first thing I just want you to pay attention to is where I've got this alert line. This is one of those levels that I have to my discretion that is a very powerful level in this particular market. It's one of those levels that's really well respected. Each time it's tested on the way up or on the way down, it is respected time and time again. And if you just look historically at the daily time frame, you can see that we've got plenty of times in history where the market has tested that level. Let's just bring on our repeater tool here, and it's become resistance. It's been respected as resistance. We then saw support. It's become resistance, and then this zone here and here, right here, right here. Most recently, again and again, and then it was support, right? So whenever we see this and we see more than 3, 4, 5 tests of this level being respected on a higher time frame, in this case the daily, it gives us some confidence that when that price is tested again, there's a really high probability that there should be a reaction there, because it has happened historically, and that's how we make money in trading or investing. We look at historical patterns and we build rules around high probability moves, right? So two things to note here. One, that level, when it's tested, there should be a reaction there. But two, what also happens is these levels act like magnets. So when you look left into structure and you see these time and time again, these tests of these levels, price tends to gravitate or magnetize towards those levels in the future like magnets. So the closer we get to that level, the higher the probability is that we're going to actually test that level in the first place. Well, what does that mean? Well, let's go down onto our trading time frame now and start to look at what's going on. I'm going to go down to the 4-hour time frame, and you can see recently, if I just thicken this up, this market has been pushing down, right? If I just bring on my trend line tool and just draw this out for you, we had this retest up here where we failed to put in a new high, and then we had this new low, outside return, new low, and then we consolidated for a bit, then we put in this new low, right? And now we're pushing up. So around this level here would be a good area, because we're in that previous low zone, right? So that previous low would be a good area to look for a potential short down to this magnetized zone that we just identified on, on the higher time frame, right? So this is the zone we're looking at, this where I've got this alert line here, this red line. So if we're predicting that market's likely to push down there, we'll at this zone here, we'll look for a potential structure-based long, not a greedy long, just quickly in out, a high probability move, probably targets at this level of structure here for now. But in the meantime, I want to look to ride this down to that level, because we know it acts like magnets. Now, the best way to do this is to start looking at structure, okay? Where are we at? Well, we're at a previous low. We're at a previous low right here. So already it gets a tick in the box to say that we're in a pullback, okay? And the pullback is at the previous support level, and support becomes resistance. We know this because we know from testing lots and lots of historical data. You see it all the time. So once we're in that zone, what we want to do is build up some confluence, some confidence that there is a high probability chance of a reaction or a reversion of the trend back once we stack up these confluence factors. We want to think like as many traders as possible. Now, one of the first things you can do is you can use, say, an equal measured move, right? So one of the first confluence factors is this, what we call a harmonic move or an ABCD pattern, right? Equal measured move, where we can see that, okay, price action, if we were to put an equal measured move up into that zone, then great, we've got the equal measure move completing right up in that zone there, and we can start to tighten this kill zone. So where the kill zone started like this, we can now start to narrow it down a bit, right? Now, what else can we do? Well, we can bring on our Fibonacci retracement tool and go from the most recent high to the low, and you can see we've got that 50% retracement lining up perfectly with that equal measured move as well, okay? Now, something else I want to share with you is something called a Fibonacci inversion, which is a Fibonacci inversion. It's an actual strategy in itself. And what you do is this is called a complex pullback here. What you do is you take the low of this pullback to here and back down, and you'd be looking for that 1618 extension up here for an entry. Okay, so that 1618 for an entry, and then on the Fibonacci inversion strategy, all you do is you set a limit order there at the 1618. You set your targets at, if you're taking one target, you set that at the 618 retracement from the low up to the 1618. So in this case, the target would be right here. Okay, some people like to take targets at the low, or a full continuation would be taking targets down here at the low, but the 618 is the conventional one target, and then all you do for the stop loss is you make this a 2-to-1, so you half the risk is half of the reward. So you put that at 2-to-1, right? And then once you're at a 2-to-1, that's where your stop loss would go, and you just enter that thing in. So you can see if you was in the Fibonacci inversion trade now, you'd be about 50% of the way to your profit target in this case. Okay, that in itself is a strategy, Fibonacci inversion strategy. In order to understand the optimal places to enter that, you still have to know how to identify trending markets and high probabilities situations to actually execute those rules of engagement. And we teach all that stuff over at Tier 1 Trading. We've got a whole module just on this strategy. Very, very powerful. Those of you familiar with Jason Stapleton, he used to love this strategy. It's a phenomenal one. So that's another way to enter. But even if you don't trade that, you've still got that Fibonacci confluence, right? You've got the 1618, you've got the 50% retracement, you've got the equal measured move. We've got a really tight window for entry here. Now, unfortunately, I got to this trade to show you this after it was playing out. So I can't actually, this is a bit of a hindsight trade, but it still shows you the power in this stuff, because look what happened when we hit that. It just rolled over, we rolled over, and this is where I want to show you one more setup. And this is a setup that I've shown you guys in other videos, and I did a whole video dedicated to this particular strategy, which you can go and watch right here after this video. You get the download, you get the printout, all of the rules of engagement, everything. You can just have that for free. But what it's called is a Gartley pattern, okay? And what a Gartley pattern is we look for the impulse leg, which we've got here, and then we wait for an X to A leg, and the B point has to hit the 618 retracement of X to A, but not hit the 786. And then once that's complete, we look for the C leg, which has to hit the 618 retracement of A to B, okay, but not violate A. And then finally, we're looking for that 127 extension for the Gartley, which would be up here somewhere. If you just double check the extension. And again, Fibonacci extension tool you can use for Confluence as well. You've got that 1414 up there. But the 127 extension would be about here, right? So even if you didn't wait for all of that confluence factor and you just trade the Gartley, which would just be a sell limit order, all of this combined up in that one zone makes this a very, very high probability trading setup, okay? So you're looking between here and here, essentially, right, for your high probability zone. And look what happened with price. As soon as we entered that zone, bang, we rolled over. And with the Gartley pattern, of course, your profit target would go at the 382, which you would have had to adjusted with price. And you can see you already got taken out for profits on there. So you're already out of this trade. You've already, you've on the way to the bank, you're laughing, right? So you've got the money from that trade already. So this is something that, played out earlier on today, but I thought I'd share it with you because it's really, really valuable. The way that you can approach this is not, you don't have to be one of these traders, these types of traders. You can use something called CTS scoring. So CTS scoring means that, look, if you've got minor structure at the completion point, right? So you could give yourself 1 point. And if you've got a pattern completion, right, you could give yourself 3 points. If you've got a fib confluence, you might give yourself another point for that. If you've got another strategy set up like a fib inversion, equals 1 point. You might have RSI overbought. You might drop down to a lower time frame and find that you've got a double top at completion. And you can basically build up a scoring system for high quality setups. And guess what? If you've got 10 points or 8 points or whatever it is you need to enter, then you could, if it's an 8-point trade, you enter a certain way. If it's a 10-point trade, you could be more aggressive, or maybe you extend your target, or maybe you're tighter with your stops. If you've got a 12-point system, you might just enter limit orders, and you just have a real tight stop, and maybe you have like a higher position size. Okay, so think about dynamically adjusting all of this stuff depending on the quality of the setup. So there's like 3 or 4 different setups here in one zone, and we've narrowed that down into that one zone, which means we could easily have put in like a real aggressive entry here, limit order entry, increased position size, tight stop loss, because we've got certainty. The more higher quality scoring that we've got, the more certainty we have in the move. Therefore, the more aggressive we can be on the entry and the target taking and the stop breathing room and all that kind of stuff. I hope that makes sense. I know it's a lot to take in for one video, but this is kind of a little bit more advanced. I know there's going to be comments saying it's way too confusing and all that kind of stuff, but I appreciate I've been over a lot and I've covered a lot of ground in a very short period of time. If you do want to learn more stuff like this, I'll put a link in the description for an upcoming workshop where we'll cover more of this stuff. Or if not, if you're a bit more impatient, go and check out Tier 1 Trading, and you can come and watch us do this every day. So until next time, have a great rest of your day, and I'll see you in the next one.